Hello dear traders, today is the last day of a trading week and you're watching Financial News with me, Anna Kasaskina. This trading week ends up with the US dollar rally. The decision of the European Central Bank to extend the duration of the quantitative easing program encouraged traders to buy the US currency. These actions significantly weakened the euro, as investors opted for the US dollar as a lucrative asset. Besides, investors decided to increase long positions on the US dollar because of the positive data on the US unemployment claims. Thus, optimism of the Australian dollar buyers faded away. The strong US dollar did not allow the Aussie to develop a bullish trend by breaking through the resistance level at 0.75. The Australian versus the US dollar pair fell 60 pips down to 0.7440. In the mid-run, currency experts foresee a further downward movement of the pair. The target level is seen at 0.72. Nevertheless, some analysts doubt this scenario, inspired by positive macroeconomic data from China, the main trading partner of Australia. China's National Bureau of Statistics reported that consumer prices index increased 2.3% year-on-year in November, edging above the median forecast for a 2.2% gain. Last month, the survey logged the strongest inflation rate since April this year. Besides, the market cheered a report on factory gate price inflation. China's producer price index rose 3.3% in November from a year earlier. The reading from the National Bureau of Statistics beat economists' median forecast of a 2.4% increase. The PPI hit the highest score since October 2011. Investors take notice of Japanese shares, which are rising in value. The devalued yen gives exporters confidence, so they consider massive purchases of Japanese shares, as a weak yen makes exported goods cheaper in dollars. Today, Japan's Nikkei has jumped to the strongest mark since December 2015. The yen traditionally followed the opposite dynamic from the stock market. Meanwhile, the yen slid 100 pips against the US dollar. The dollar-yen pair is again heading for resistance at 115, aiming to break it. The pair is now trading at 114.40. Currency experts from Scotiabank note that unless the dollar-yen pair breaks above 115, bulls will lose interest in the pair. It could reverse downward, aiming for 111 points. And this was Daily Financial News on Insta TV. Stay tuned.